There are multiple challenges which keep happening, particularly in the light of post-COVID disruptions. How does that pose a threat to risks for fintechs?
Definitely, fintech has seen a good amount of growth pre-COVID era, and then when this COVID came, that was the real test that how the companies are able to sustain this period. Because one way to look at is fintechs generally are doing a small ticket, small tenure loan, and this is one of the risky segments if you look at from a secured lending perspective. Now, the moment COVID happens, there was a complete lockdown. The fintechs have to look at that how this recovery will happen, because the shorter tenure loans, if is not collected on a particular time, they are tend to go into a default or into a slippage. So there, the fintechs have scaled up. There were a lot of innovative methods which come out in terms of the collection practices.
Kuntal, let me ask you to give our viewers a kind of a bird's eye view. You are a consulting firm. What are the kind of 3 or 4 key things you are telling the financial services players and the fintechs to be mindful of as the risk environment becomes more and more challenging and unpredictable, really?
There is a boom period, there is a lull. So the guys who have followed the governance model from the day one, then RBI came in. Last 2 years, there are 2 regulations which said, so it differentiates between the child and the grown-up. The grown-up are growing. It starts from the day one, how you typically keep the governance level, how do you allow also with internally to ask questions, challenge your decisions because you are the promoter, but it should not be like, I am taking all decisions. The third is that a lot of this analytics work, you talked about the Ukraine and other challenges, but they have already evolved. They have using analytics to find out if I am a platform, I have 100,000 player today, I am lending say 5 to 10,000.
Vivek, tell me, more and more fintechs like yours and others are now trying to run concentrated verticals. Do you see this as adding to the risk, or do you see that as something which is actually diversifying the risk?
So, see, if you look at India, is a very underserved, underpenetrated credit market. The credit card penetration is around 4-5%. So there is a huge credit demand which people were relying primarily on the traditional sources and so on and so forth. Now, there are various ways to work on it. One, you go big bang into the market and say, I will do everything. Now, suppose a fintech like me and I go and say that, okay, I want to give a housing loan. I want to go a four-wheeler loan or something like. It's like going and fighting dinosaur in a Jurassic Park. You can't go and compete with HDFCs of this world. But definitely your niche area that yes, there is some demand which is coming from a mass public, which is unsecured short-term loans or a small SME loan or something, which these guys will not be able to touch upon.
Kuntal, from your perspective, this whole business of concentrated risks from fintechs, are you talking to your clients to try and advise them against it, or what are you telling them basically?
So if you look at it, the entire fintech model, it starts with a cluster or geography. And as Vivek explained, they are looking to upgrade one. What also they are doing is that they are looking this at the homogeneous pools within the personal loans, how their behaviors are doing. So there is a constant look at this homogeneous pool, not an individual level, and to share the risk they are doing is jointly they are going with the other NBFCs or the banks, joint lending. They are keeping some because they have this advantage of originating loan in a cheaper price, which larger bank. So the risk sharing is working out well for the larger banks. They couldn't go to penetrate that level, and they are originating, keeping some part on their book and sharing the risk. So it is working well. So far it is good, but constantly monitoring of the portfolio. And also you have to remember the macros. We are in a great demand boom. We have a last year growth of 7.2% of GDP, which shows the demand side of that constantly growing. So as of now good, but systemic risk or idiosyncratic risk can come.